Every few years, people ask for a final answer on how to beat crashes, presidents, and inflation. They want a ticker symbol or a secret asset class. They usually don't like my real answer. The only investment that reliably beats every crash, every president, and every inflation cycle is the one you make in yourself. My real number one investment, people quote me for stock picks. The quote that actually matters is much simpler. The best investment you can make is in yourself. In another interview, I put it this way. Generally speaking, investing in yourself is the best thing you can do. Anything that improves your own talents, nobody can tax it or take it away from you. They can run up huge deficits and the dollar can become worth far less. But if you've maximized your talent, you've got a tremendous asset that can return tenfold. Think about how different that is from everything else you see in 2026. Stocks can crash 30, 50%. Bonds can be destroyed by inflation. Real estate can slump when rates rise. Currencies can be devalued or mismanaged. But if you become extremely good at something the world genuinely needs, that ability can't be taxed directly the way income and capital gains are. Can't be inflated away the way cash can. Can't be taken from you in a market crash. Markets can close tomorrow and your skills will still be there when they reopen. That is why, by a wide margin, your own skills and character are the best investment you'll ever own. Why this beats inflation and chaos in 2026. People are rightly worried about inflation in 2026. They should be. Analysts see inflation settling above pre-2020 levels, with many forecasts in the 3-4% range and plenty of uncertainty around energy, healthcare, and housing costs. In that world, sitting in cash and hoping is not a plan. My answer to inflation has stayed the same for years. The most beneficial thing you can do is to excel at something. Your skills cannot be taken away from you, nor can they be diminished by inflation. If you become the best in your area, top engineer, top salesperson, top nurse practitioner, top electrician, top designer, your earning power tends to rise faster than the price of milk and gas. Why? People don't hire a great surgeon, lawyer, developer, plumber, or marketer based on the CPI reading. They hire them because they need something done right. When prices rise broadly, top skills often reprice upward too. The world negotiates harder with average performers than with indispensable ones in high inflation. Cash erodes, bonds get repriced. But the market for rare, valuable skills often gets tighter, not looser. That's why I keep telling people, if you're scared of inflation, don't just look for the perfect hedge, become the hedge. Crashes, same story. The market fell almost 50% in 2008. In 2009, it fell sharply again in early 2020. The people who got through those periods best weren't the ones who predicted the bottom. They were the ones whose earning power didn't evaporate because they were useful. Presidents change, policies change, tax rates move up and down. If you're extremely good at something important, every administration still needs you. That's why this one investment outlasts every cycle. Before you obsess over the next hot stock in 2026, ask a harder question. Am I good enough at what I do that the world almost has to pay me more over time? If the answer is no, you've just discovered your best investment opportunity. What investing in yourself actually looks like. Invest in yourself sounds fuzzy. It isn't. It's as concrete as a balance sheet. Here's how I've always thought about it. First, your earning power is your primary asset. When I tell young people this is the best investment by far, I mean, the difference between being an average communicator and a great communicator can be worth hundreds of thousands or millions over a lifetime. The difference between knows the basics and top 10% in the field can mean you're employable in any environment at better terms with more choices. That return dwarfs the difference between a 7% and an 8% portfolio if you're still in your working years. Second, skills don't get marked to market every day. Your portfolio balance changes minute by minute. Your competence does not. If you read, practice, study, and work on important problems for 5 straight years, you'll be better, whether the S&P is up 50% or down 30%. Third, this investment compounds quietly, like the best businesses do. Learning is cumulative. Each good book makes the next one easier to understand. Each project makes the next one easier to execute. Each honest relationship built on trust brings more opportunities. The curve is slow for a while, then very steep. That's what compounding looks like in human form. If you want something you can actually follow between now and 2030, here is how I would approach it if I were starting over in 2026. 1. Pick one high-value skill and decide to become very good at it, not 5-1. Ask yourself, what skill sits close to what I already do, but pays much more when done well? What skill will likely still be in demand 10 years from now? For some people, that's data analysis or software engineering, sales and negotiation, healthcare specializations. Skilled trades with chronic shortages, deep expertise in a particular industry. The exact choice matters less than the depth you pursue. The market does not pay a premium for sort of knows this. It pays a premium for rare excellence. Make a simple commitment. For the next 3-5 years, I will become measurably, obviously better at this one thing every quarter. That becomes your main capital project, too. Create a reading and learning habit that would embarrass your past self. People laugh when they hear how much I read. They shouldn't. If you want your self-investment to beat crashes and inflation, you need a daily input habit. 1 hour a day of serious reading in your field and adjacent fields. Books and long-form articles, not just social media. Case studies, annual reports, biographies of people who did what you want to do. You don't need to copy my exact number of pages. You do need to move from being a consumer of noise to a collector of knowledge. Think of each good book or course as adding a little to your intellectual equity. Over 3 to 5 years, that adds up to a very large position. 3, make yourself indispensable where you already are. You don't always need a new job. Often, your best return comes from becoming the person your current workplace can't afford to lose. That means be the one who solves hard problems, not just forwards them. Build a reputation for reliability and integrity. Learn parts of the business others ignore, numbers, customers, systems. I've always loved businesses where managers act like owners. You can behave that way, even if you don't own a single share over a few years. People notice. When they do, your compensation and options usually change. In a chaotic economy, the indispensable people are the last to be laid off and the first to be rehired or recruited away. That's worth more than any short-term trade for. Protect the asset, your mind and body in 2025. I told young people that investing in yourself also means protecting your mental and physical health. If your brain is foggy and your body is falling apart, it doesn't matter how many books you own. You are the operating system for every skill you build. That means enough sleep to think clearly. Basic exercise and decent food so you're not running on fumes, limiting substances and habits that drag you down instead of lift you up. You wouldn't starve a great business of maintenance capital and expect it to perform. Don't do it to yourself. 5, tie your financial plan to your self-investment. Not the other way around. Here is the punchline most people miss. The better you get, the easier financial investing becomes. Higher, more stable income makes saving simpler. Better judgment from reading and experience makes you less likely to panic or chase bubbles. So in 2026, instead of saying, if only I had more money, I'd invest it better, flip it. If I invest in myself, I'll make more money and every dollar I save will have a smarter owner. Keep your personal finances simple while you build yourself. Live below your means so you can save consistently. Use low-cost index funds or a handful of understandable investments. Avoid high-fee complicated products while you're still building your human capital. Your self-investment is the engine. Your portfolio is the trailer it pulls behind it. Why, this is the only thing that truly beats every crash, every president, every cycle. If you invest in yourself from 2026 to 2031 with the same seriousness you'd put into building a business, here's what will be true. Almost regardless of the headlines, crashes will come and go, but you will still be able to earn, adapt, and recover faster than most people. Presidents will change, but your core skills will remain valuable in any political environment. Inflation will rise and fall, but your ability to command higher pay or build cash flow streams will not be inflated away. That is what you want from a forever investment. Stocks, bonds, real estate, all of them matter. I've devoted my life to them. But underneath all of it, for every person listening, the question is, am I treating my own abilities as my primary compounding asset or just as a given? If you start treating them as your number one holding, you'll be amazed how much easier every other financial decision becomes.